So if you look at urban and rural, you can actually see a sort of a middle bulge in rural spending. You can call it a middle class bulge in rural spending, where you've actually seen a fair bit of a pickup in growth in that middle class segment within rural India. Food as a share start going up, or durables as a share start coming down. That would have been a red flag.
Hello and welcome to Air News. I'm Chahata Vasti, and today we have with us Mr. Arjun Nagarajan, the Chief Economist of Sundaram Mutual Fund. And my first question to you is, what is the survey telling us about the economic health?
Okay, so let me put it this way. This is a survey that happens fairly frequently. It sort of gives us a sense as to what are the spending patterns within rural India and urban India. What are the absolute spending levels in rural and urban? So from an economic health point of view, it doesn't really tell you too much, apart from the fact that directionally the economy is going in the direction that it is expected to go. So what do I mean by that? Say we are a developing economy. So the most important thing from a developing economy point of view is how much of money is being spent on essential goods, how much of money is being spent on discretionary goods. You would ideally want, as an economy grows, you would ideally want the amount spent on discretionary consumption sort of start coming down, and essentials start coming down and discretionary start to expand. So if you look at data, let's say from 2000 onwards or so, somewhere around in early 2000, around 12% of the consumption basket or 13% of the consumption basket was money spent on discretionary goods. And it was anyway expected that as India progresses, as growth picks up, there's more affluence that sets in. You have much more affordability that comes in, and you will start spending lesser and lesser as a percentage of your expenditure on essentials. And yet that will free up more money for you to spend on discretionary. That's exactly what has also been happening. So from roughly around 13% in early 2000, which was our spend on discretionary, the consumption basket, somewhere now, we are somewhere around 24-25% we are spending on discretionary. By 2030 or so, you'll be seeing this number go to, let's say, around 33-35. Those are some estimates about how much of the expenditure basket will you be spending on discretionary. So this sort of reiterates, this NSSO, the survey, sort of reiterates the same thing, where you're actually seeing food as a percentage has now come down to roughly around 47% or so. So that is a directional drop. And within food, you can see that cereals has seen a drop in as a share from a consumption point of view. Pulses have come down. The spend on food and beverages have gone up. The spend on, let's say, toilet articles have gone up. Conveyance has gone up. More importantly, durable goods, which is largely in the discretionary space, that has gone up. So from an economy point of view, I think it would be fair to read this as a reiteration of the fact that the trend in developing economies, especially in a developing economy like India, it's going in line with the trend. I think that would be the immediate conclusion I would make from the survey.
You spoke about affluence. Is
Yes.
this affluence, is it this affluence that we're seeing, is it well distributed? Is it trickling down?
So when you're looking at it from a point of view of how so this is a survey that actually tells you the expenditure. So in India, we don't really have surveys on income distribution. We have on expenditure. Then one will have to make an assumption based on, let's say, for example, you have 10 segments of fractals. Each segment of the population has a very different propensity to save. So then one will have to create a model of their own and say, okay, based on these spending patterns across these fractals, this is probably what one's consumption basket would be. And then you look at the inequality or the equality in a certain sense. So this survey doesn't sort of tell you that. It only gives you how people are spending. So let me tell you two things that come out from this. So which you can loosely take as a reflection of incomes as well. So if you look at urban and rural, you can actually see a sort of a middle bulge in rural spending. You can call it a middle class bulge in rural spending, where you've actually seen a fair bit of a pickup in growth in that middle class segment within rural India. If you look at the same thing, and if you look at the topmost expenditure class in rural India, you can actually see that pace of growth has moderated. You come to urban India, you don't really see that much of a middle class bulge there. You can actually see that as your expenditure levels keep increasing, which you can loosely for now assume as income levels, you can see that the growth of spending has been moderating. So I think this is something that comes out from the survey. One can't exactly say as to why that has happened, but there are studies that actually are talking about how this middle class spending bulge that has happened within the rural segment could be related to the pickup in the social welfare schemes of the government, which you can loosely say a state and central government revenue expenditure pickup. So that is loosely what one can surmise from the numbers. So yeah, so long story short, it looks like because you don't really have an income criteria here, you can look at expenditure as a proxy, and you can see that there seems to be a middle class expenditure bulge, which one can loosely link it to the social welfare schemes, which is largely reflected in the pickup in revenue expenditure in both center and state.
Is there a lesson here somewhere for marketers and sales personnel? Can they gain from this survey?
Let me put it this way: yes and no. So we work in the markets, so I would rather call myself a market economist in a certain sense. So for us, what this sort of tells us is that the hunch that we've been having about rural India, about how rural India has been spending at a higher pace than what the earlier dated numbers sort of told us, that's more of a reiteration for us. That is number one. Number two, it gives you, from a marketer's point of view, for those who are on the ground, let's say for manufacturers, etc., it puts a real number to a narrative. It tells you that, hey, this is exactly what the survey tells us, that spending has been, spending patterns have been, spending growth has been. So I would want to think that it puts a number to a narrative, more importantly, and it depends on the marketers in what segments, how they actually take it up. Say, for example, if you look at durable goods, like I mentioned earlier, you've seen roughly around a 2%, 200 basis points sort of an increase in the share of durable goods in the expenditure basket, which I think it's somewhere close to around a 7% or so. So depending on which segmentation you are, you will interpret it differently. Say, for example, cereals and pulses, you've seen a fair bit of a drop. So depending on where you're positioned, which you're a marketer in what sort of a sector of the economy, you'd actually read it differently.
Does this mean there'll be more investment in certain segments? Can we expect more investments in certain segments where the expenditure is seen as increasing? But a probability?
Could be. So that would be very sector specific. So like I said, from a markets point of view, so the reason I stress on markets is, for example, companies who are in the business, let's say, for example, durable consumption goods, or people who are in the business of making household consumables, they're generally ahead of all these data points, because these data points are fairly dated. So it sort of pushes them to make their own forecasts, make their own sample surveys, and get a sense as to what it is on the ground. So for them, this will be more of a reiteration of the fact of whatever models that they create. So I would assume that they would be ahead of the curve when it comes to data, and this would probably just be a reiteration of of the forecasts or the hunches that they already have on what the narratives are on the ground. So I wouldn't want to think that this data is going to bring about more investment. I would think that the markets have sort of preempted this, and this is just a reiteration of the narrative that has already been there in the market about rural spending and rural consumption picking up. Because, for example, every quarter the companies come out with results, and in the results that companies put out, they also talk about how they see rural India. They talk about trends. They talk about the narratives on the ground. So loosely, whatever you've seen in the NSSO numbers have been there in the narratives from a corporate India point of view for a while now, is what I would want to think. So it doesn't sort of come as a surprise, is what I'm trying to say.
So can we say that it's more of a direction for the individual investor more than the corporate retail investor?
For the individual investor, this is more from a corporate point of view that I think it remains very important. From an individual investor point of view, because let's say, for example, there's an individual investor in a particular stock, the weightage will be more of what the company or the management is sort of guiding rather than the NSSO survey numbers. So, like I said, I would want to look at this as a reiteration of a trend. For example, what people might have been concerned if this gave a completely different direction. Let's say, hypothetically speaking, suppose you saw food as a share start going up or durables as a share start coming down, that would have been a red flag. But directionally, that you don't really see any red flags, at least so far in the survey. So I would only want to look at this as a reiteration of the narrative that has already been there, of the data that has already been consumed by the market through other short frequency indicators. So no red flags, nothing of that sort. It's more a reiteration of the broad narrative. There are some observations, like I said, in certain segments where you can actually put a number to a narrative saying, hey, this probably is the increase or rather the pickup, and this probably is the drop. So from a retail investor point of view, I don't really think it adds anything incremental. It just sort of reiterates the narrative on the ground.
Right. Are there any opportunities in this survey that can be seen in this particular survey by small businesses?
So these surveys sort of are a little dated, and they're dated for a reason, in the sense that they're very, very large in nature. So it takes a very long time for them to actually collect the surveys, do their statistical analysis on them, sift it for all inconsistencies, and then put out the survey. So it takes a very long time for the survey to sort of come out. And by the time the market already knows what the trend is on the ground. So I would only look at this as a reiteration of sorts. And from a market's point of view, I think the immediate implication would be that maybe in another year or year and a half down the line, you will probably see a new CPI, a retail inflation number, because these retail inflation numbers, where the weights for different items on the retail inflation number, they are linked directly to surveys like these. So when you're actually seeing a fair bit of a drop in cereal consumption or a fair bit of a drop in food inflation, the weights in these retail inflation baskets also will change. So which means now, let's say, for example, cereal saw nearly a 5% sort of a drop in share, which means you will see some proportionate sort of a drop in your retail inflation numbers or your CPI number weights. So maybe a couple of years down the line, you will start seeing marginally lower inflation prints, because the volatility of vegetables or cereals will, or rather the contribution of that to the headline will start slowly tapering. I think that would be the immediate market implication that I can think of. From a retail investor point of view, or from a corporate point of view, I would only think that this is a reiteration of the studies and the forecasts and the modeling that they've already been doing.